Katie, it's great to have you on. You've been expecting, this little summer rally we got into mid-August would probably not be sustained, and we rolled over once again. What are we targeting right now in terms of the S&P 500? Where do you think we have to visit?
Well, the latest downdraft took the S&P 500, as you mentioned, down below this 38.15 support level. It's not a confirmed breakdown yet. That would require a couple of weekly closes below because it is such a long-term major level. And unfortunately, if that breakdown is confirmed, the targeted support is just south of 3,200. It doesn't mean it gets there quickly. There is some interim support just north of 3,500. And we actually think that's doable for this year. But thankfully, we are coming into today, today is showing a short-term oversold reading. And part of what you just cited, that AAII data, so sentiment got a bit oversold, our stochastics got a bit oversold, and really just kind of over the broad basis of market internal measures, we saw some oversold indications. So it does collectively support a minor bounce in here. We think it will be fleeting, but at least could stave off that breakdown a little bit longer and give folks a chance to sell at a better price.
Right. I was going to say, if we do get a bit of relief and the market is able to bounce a bit, clearly you think that would not be something to bet on continuing. You think it would be something to sell into. But if you're scrutinizing the character of a rally, like a lot of people did coming off the June low, what would you be looking for as a sign that momentum was rebuilding to the upside?
Well, I think positive divergences is the easiest and most obvious thing that would be looking for, meaning higher lows in our indicators as prices coming off of a lower low. That would be a first step, of course, and really just a loss of downside momentum that looks meaningful. While we have that short-term oversold condition, we don't have an intermediate-term oversold condition. And unfortunately, those intermediate-term gauges that we track are going the wrong way. So we have long-term downside momentum and now also intermediate-term downside momentum. So we do think that bounce would be fleeting. And we think that the bottom will be a process, not an event. So we want to see those divergences unfold over time, and we think it could take months.
Yeah. That would be, I suppose, typical after this kind of a long-term downtrend. Now, the NASDAQ 100 or composite have been leaders to the downside here. And, we see some major stocks this week, Microsoft, Alphabet, undercut the lows that they had hit back in June. So it clearly seems like there's some headwinds there. Is there a different story with the NASDAQ, or is it essentially the same story, but I guess just more so?
Well, it is. It is exhibiting downside leadership, and that's really coming from the mega caps. And we had cited a couple weeks ago the breakdown in NVIDIA as being a bad example for the rest of them. And now we have Google, we have our Alphabet and Microsoft. Meta has already broken down. So these breakdowns are becoming very widespread below the summertime lows. And unfortunately, what it indicates is that the major indices are likely to do the same. And unfortunately, also the high growth stocks that I think a lot of investors have put some hope into in suggesting that perhaps they had found their bottom. I think, unfortunately, they're going to be surprised to the downside here, with those likely to follow suit, especially if we see heavyweight Apple break down. The level I'm watching on Apple is around 150. If it is taken out, I think that's where we're going to see that real sentiment shift. Already the VIX is poking above a minor resistance level and has room to 35. And if we see Apple break, I think we'll see that level.